The stock market, also known as the equity market or share market, is a platform where publicly traded company stocks can be bought and sold. The stock market is a crucial component of a capitalist economy and plays a vital role in the financial system. Individuals and institutional investors, such as mutual funds, pension funds, and hedge funds, buy and sell stocks on the stock market. When an investor buys a stock, they become a shareholder in the company and have a small ownership stake. As the company's performance improves, the stock's value increases, and the shareholder can then sell their shares for a profit. Conversely, if the company's performance declines, the stock's value decreases, and the shareholder may sell their shares at a loss. The stock market operates on the principle of supply and demand. When more people want to buy a stock than sell it, the stock's price goes up. Conversely, when more people want to sell a stock than buy it, the stock's price goes down. The stock market is influenced by a variety of factors, including the overall health of the economy, interest rates, and company-specific news and events. The stock market is typically divided into two main sections: the primary market and the secondary market. In the primary market, companies raise capital by issuing new shares to the public. In the secondary market, investors buy and sell shares that have already been issued. The most well-known secondary market is the stock exchange, such as the New York Stock Exchange, NYSE, or the Nasdaq. Investors can buy and sell stocks through a brokerage account. A brokerage account is an account that allows an investor to buy and sell securities, such as stocks, bonds, and mutual funds. Investors can open a brokerage account with a traditional brokerage firm or an online brokerage firm. In conclusion, the stock market is a platform where publicly traded company stocks can be bought and sold. It plays a vital role in the financial system and the economy, and investors can buy and sell stocks through a brokerage account. The stock market's performance is influenced by a variety of factors, and investors can make a profit or loss depending on the performance of the company whose stock they own. In addition to buying and selling individual stocks, there are several other ways to invest in the stock market. These include mutual funds. A mutual fund is a type of investment vehicle that pools money from multiple investors and uses it to buy a diversified portfolio of stocks, bonds, or other securities. Mutual funds are managed by professional money managers who make decisions about which securities to buy and sell. Exchange-traded funds (ETFs). An ETF is a type of investment fund that is traded on stock exchanges, similar to stocks. ETFs typically track a specific market index, such as the S&P 500, and allow investors to gain exposure to a diverse range of stocks with just one investment. Options trading. Options trading is a form of derivatives trading that allows investors to speculate on the future price movements of stocks or other securities. Options trading can be complex and risky, and is typically only suitable for experienced investors. Stock index futures. Stock index futures are contracts that allow investors to speculate on the future performance of a stock market index, such as the S&P 500. Similar to options trading, stock index futures can be complex and risky and are typically only suitable for experienced investors. Overall, the stock market can be a great way to grow wealth over time, but it's important to remember that it can also be risky. Before investing in the stock market, it's important to have a clear understanding of your investment goals, risk tolerance, and time horizon. Additionally, it's important to diversify your portfolio and to consider the advice of a financial professional before making any investment decisions.